Here we go with the final trade of the day. Alan Knuckman of Agora Financial joins me now. He has his trader take to begin with.
Markets are strong. We did stall yesterday, but we made some new swing highs on Monday. So you want to learn to sell into strength and take advantage of these big market moves. As JP Morgan had said long ago, he made all his money selling too soon.
Let's get to your trades. And we call this the weekly options alert, but you've been taking some longer time horizons, going beyond just a week of an options expiration.
The idea here is to use some short-term options, but because volatility has come down, that component of the options price is much cheaper than it's been in a long time. So I can buy a month and a half or 2 months at a time instead of 2 or 3 weeks. Gives me a larger window of opportunity.
And let's run through your winners.
10 in a row, so I've done very well here lately, and I want people to be aware of the small moves in the stock can be big gains in the options. So we made some money in Intel on Monday. We got out of Intel and MU, Micron, both with 100%. Now, these stocks could continue to go higher. We had more time on these options, but from a money management standpoint, it certainly makes sense to cash in and take some big winners.
Bank of America.
Bank of America stalled. We're about break even there. Now, that is a March option. That's one short-term play here that has only a week or so left to go. It's a 28 call. We're a little bit below break even, so if we can make another push above 30, then we can get where we want.
You also have a position in Advanced Micro Devices, AMD.
Right. We played that stock a number of times, a couple times this year already. It's an April option. It's a $20 call, so we're leaning on that $20 support. That was the breakout, the bottom level before the breakout in January, where we made some good money. So a push above 25 targets 30, and that would be a very nice payoff.
And your WPI trade trigger is a retweet.
Yes, smart money is looking to fly, as you like to say. Twitter time. So Twitter's a stock that's kind of been left out. It's unchanged over the last 52 weeks. $30 is the midpoint of this action. We've been trading between 25 and 35 since the July drop. So we're leaning on that level. We're looking at a $29 call for April. April option has about 45 days, so a month and a half of time. Look for that stock to fly one more time.
I hope it happens for you. And your trading floor takeaways, number one.
Ratio rise. Now, we said something had to happen. So we were going to see, with the PE ratio at a low level, we were going to see prices rise, and that's exactly what we saw here. So we're at PE ratio right now is about 16.2, which is still cheap, still below the 5-year average of 16.4. So even though we've had a healthy rise in price, it hasn't hurt the overall valuation of the market that much.
And then low bar.
Low bar, the next quarter. Now, first off, let's summarize where we are. 90% of stocks have reported in the S&P, so we're essentially done with this quarter. We had a 13% earnings growth. Now we're looking to next quarter, which doesn't start till April, but we're looking for essentially no earnings growth. So we've done this before where they set low expectations, and we'll see if we can hop high over that.
And then number 3 on your list.
96th. Now, I've talked about this over and over again, the dollar. The dollar now has been trading between 95 and 97 for November, December, and January, and now it's at below 96. So let's see if it can go down and take out the bottom of this range. If it does, that target's 93. And the last time we were at 93 was September, and that's when the S&P made an all-time high. So you can see how it all can come together for us.
Thanks for the Trader Talk.
Thank you.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.